Just a standard risk disclosure before today's video. I'm not a financial advisor or trading expert. I'm simply a trader that likes sharing a bit of what I know. Trade at your own risk. I hope you enjoyed the series. Hey, welcome back to my fifth video in a series I'm calling Back to the Basics, where we'll work on covering all of the basic fundamentals needed to start trading futures. From beginning to end, I want these videos to be straight and to the point, focusing on all areas of knowledge needed to start taking trades and building that confidence within yourselves. In the last video, we specifically talked about moving averages and the three that I have on my chart. Today, I specifically want to talk about identifying trends, finding levels of support and resistance, how to draw trend lines and channels. Now, I don't want to complicate things or make things confusing or anything, so the basics are as follows. The way that I like drawing my trend lines is I'll start at the top of a move here, and I'll make a channel moving down, having prices hold very neatly on both the top and bottom sides of price action. So as prices are moving here, start at the lows of where that move starts, and as prices continue up, drawing a nice channel moving up with prices holding neatly. Now, areas where there's overlap of bars, congestion, exponential moving averages are flat, I'll draw more of a range structure. And the way I like to draw those, I want a number of touches here at the top, and I want a number of touches down here at the bottom. I want prices to hold neatly. I want to try and encompass everything that prices are doing in this area. Now, it'll take a little bit of practice, but over time, you should be able to identify and draw those trend lines. But it's also not as simple as just making sure that prices hold. The way you truly draw it correctly is by drawing the trend off the first swing. So if these prices are moving down, I start, let me zoom in here just a little bit. I start by drawing at the top of the wick here, the high of the wick of this candle, where the move starts. And as prices come down, I draw it through the body, the top of the body of the candle. And all I do is extend it, and then I drag it across, and prices should hold neatly within this channel right here. You really want to draw these channels off the first swing. So for example, in this move right here, drawing off the top and off the first swing here. So we got a bit of a downtrend and have prices holding as neatly as we can get them. Now fast forward a little bit. What about here? We have this big downtrend. How are we going to draw this? Start at the top, off the first swing. And it doesn't have to be crazy perfect. It doesn't have to be off this first swing right here, right? Because if you're trying to draw a trend line like this, that's not capturing the whole move. What we want to do is incorporate price action off this swing, and as prices come down, prices hold neatly within this channel. Now over here, if you start to see prices sticking out just a little bit, I'll kind of maybe move it just a dab to incorporate prices there. As long as prices are holding neatly at the top and bottom, that's a nice solid channel to draw. And now while we have bigger channels here, we also have smaller trend lines, short-term trends. So rather than drawing channels, I'll draw these short-term lines really. We've got prices holding very neatly right here before they break this line and continue moving up to a new high. And we'll talk more about basic price action rules in a later video. Today, I just want to focus on drawing these channels, get yourself to practice drawing these channels and trend lines. Some people may start here, right? Does that incorporate all of the move? Or do we have something wider, right? Does that hug prices as well as we want them to? Are we drawing it off the first swing? Maybe this is correct, that as prices break and then continue to move lower. Now EMA here is flattening out. We've got overlapping bars. We want to try and incorporate all of prices here. We kind of see the same thing over here, starting from the lows, move to the highs. Now this is being able to draw trend lines after price action is already on the chart. But what happens if we're looking to the right and we're reading price action for the first time? This is something that is very important to practice too. We've got a short-term trend that's moving down, right? We're drawing it off the first swing. Prices break that trend and continue lower, so we could potentially have a bigger downtrend at play. So rather than just drawing that short-term trend line, that's where you pull out the channel tool, drawing off the first swing, moving it down, having prices hug neatly inside. Bit of overlapping bars here, so we got to get our trading range out, right? Prices are kind of chopping up and down. We have to adjust this trading range. We're just continuously fine-tuning, making changes as we get more price action here. Now prices are pushing above our moving average. So what does that signify? That prices could be pushing back up. And you'll see as prices continue moving up, that's exactly what happens. Draw a channel from the bottom of this move, and as prices move higher, drawing it off the first swing here. As prices continue moving higher, right? They're respecting the top level of this channel. And now prices are kind of moving sideways again. Maybe you draw some sort of small range at play there. as prices move higher. And if you see prices continue to move higher, I know we drew it off the first swing, but we could have a bigger move at play. You want to incorporate that price action. So as you get more data, you can extend it just a little bit and you can see prices are holding neatly within this channel before prices break this channel and continue in another direction. And you'll see this continue to happen, of course. You're drawing your short-term trends down, breaks and new lows, and as we continue to move lower, maybe you're drawing a little bit bigger of a channel, something like this. Prices holding neatly, break and continue higher. Got our short-term trend that's moving up with a break. As prices continue to move higher, drawing bigger channels. You're continuously doing this as the day goes on. Got a bit of a short-term trend here as prices are holding neatly before they push higher. And then as prices continue to chop along here, notice the exponential moving averages are starting to flatten out as bars overlap. They're oscillating back and forth. Look at this. So we want to start drawing, we got to be able to analyze and see a range taking place. So we want touches at the bottom, we want touches at the top. And now I didn't see this off the bat, but you could start by drawing in a trading range like this. Or maybe even you bring it down a little bit. You incorporate 1, 2, and 3 touches here. Trading range could be more like this, and the exponential moving averages are holding in the middle of the range. As prices come up and down, you continue to adjust. So now we have prices that are moving up in this region. That's when we kind of slide it up and we see, okay, well, maybe the trading range is somewhat like this. And now we're really getting a lot more price action. So you have this bigger trading range, but within this trading range, of course, there are short-term trends at play. As prices move up, we just incorporate them. Prices are moving down, we try and incorporate that too. Probably add one from back here as well. Now prices are trending upward. Right, this is continuously being done. Maybe we have a little bit of an overshoot up here, or people adjust a little bit and argue, okay, maybe we have a break of this channel that's moving up, makes a new high before pushing back down. And you can see as prices get lower, we continue to adjust off the swing. We want prices fitting neatly, right, within this channel, and you can see prices continue to hold. Little bit of flat here. So over time, essentially, this is what you want to keep doing. You want to keep charting. You want to draw those channels. You want to draw those moments of consolidation and short-term trends. And then when you zoom out, you can see we have a skeleton, right? We have this structure in play. It's easier to see what prices are doing. And if you zoom out a little bit farther, you could potentially find even bigger channels, right? So maybe back here, you can kind of see prices were oscillating up and down a bit. We want to try to incorporate all of those touches at the lows and the highs. And so now it's easier to see. You kind of look in here. Okay, we're dealing in a trading range. There was a trading range here. Short-term trends were at play, and there are specific rules alongside trading areas of the chart like this. You could also potentially see, okay, well, maybe we had some movement here as prices continue down, right? We want to try and hold. There could be a bigger channel here at play. And let's see, maybe I should try and color this a little bit, give people an idea of what I'm looking at. Now, this is just for purposes of the video, but you can see prices are kind of chopping up and down between the highs of this channel and the mid-level of this channel here. Then as prices come back down, they eventually make their way again to the midline of this channel before pushing down again. So you follow these patterns. You see what prices are doing, and you analyze the market and you can take trades based on what you're seeing. Could we have a bigger downtrend at play? Maybe you have a little bit something bigger. If you want to try incorporating all the touches at the bottom here, got 1, 2, almost 3, 4 prices kind of bouncing here. So maybe we have a bit of an overshoot before prices continue to hold in this channel moving down. And you can see as I slide to the right here, prices are holding in this channel. And so when you zoom out and you see, okay, well, we're in a channel moving downwards, prices are pushing below these exponential moving averages. You can see prices pushing below this 200 EMA as it starts to curve down. You'd be looking for short opportunities, reasons to sell and go short, right? That's the bias we would have, anticipating prices are going to continue going down. And so then we find areas of the chart to actually take trades, and we capitalize on those moves of the market to get that 1 point that we're looking for, or those 2 points that we're looking for. Looking for the market to move anywhere from 4 to 8 to 12 ticks, and that's where we make our money. So that's how I draw trend lines. That's how I draw my channels. Now, in reference to support and resistance levels, we have levels of resistance at the top. We have levels of support at the bottom. So you can see if I kind of slide over here to the right, this is what we're looking at in real time. As prices come along, right? Prices had made a high, and as they come back up to test this high, they reach a ceiling. They reach a point, a level of resistance. Prices have a resistance level here before prices push back down. And they'll continue to try and test it, right? They test it a third time, prices come back down before eventually pushing through that level of resistance that we have at the top. Now at the bottom, we have a level of support. And so maybe we have a trading range that looks something like this, right? And let me just clean some of this price action up a little bit. This is kind of what we're looking at. As prices come down, they find a level of support off the bottom of this range. Prices come back up, come back down, testing this level of support. Prices are fighting. You've got bears, you've got bulls in the market that are pushing the market up and down at this support level. And now they're starting to push back up and they're going to test it again, testing the support level. So there is a price level here that prices really don't want to push down below. And eventually the bears give up in trying to push the market lower, and then they start to push higher until eventually they just continue moving up. That's the way resistance levels and support levels work. Now, it is worth noting that previous resistance levels can act as support levels. As prices continue to push higher, if we were to extend this range a bit, right, as prices come down, they could hold at this resistance level here that we had back here. And now it would be acting as support. Our resistance level has now moved from here all the way up to here. So as prices come down, we could see prices fight a little bit at this resistance level that now should be acting as support. But eventually prices continue to chop back down and we move back to the opposite end of this trading range. They're trying to find a support level, trying to find somewhere to bounce off of. And so now with the support level that we had back here, that's all we're seeing again is this support level has been extended a little bit as prices continue to fight, and then prices will either move up or they'll continue to move down. And that's what you continue to see. Prices fall, come back up to test the EMA that we have here. Prices respect the exponential moving average. They come back down. Where are they going? To the level of support that we have down here. Prices have found a level of support. Then they push back up and they test the resistance level up here at the top of this trading range. That's what we continue to see. When prices can't push higher, they come back down and they test the support level again. That's what prices like to do. They're testing resistance level and support levels throughout the market. They're continuously changing, but it's important to recognize that and realize that that's happening. And the way that helps you is that prevents you from taking dangerous trades. If you have this uptrend, all of these prices are pushing up and you think, okay, I want to buy here. I want to capitalize on a 1 point move or 2 point move and make $50, $100. I'm going to enter long. I'm going to buy into the market. Well, you just bought into a level of resistance here because now prices couldn't push to the ceiling. They come back down and now you've lost $100, $150. That's why it's important to recognize where those resistance levels are at, where those support levels are at, because that'll help you end up taking some solid trades and hopefully make some money. So for example, we have this support level down here. Prices push above the moving average. So what is that telling us? That prices could push higher. You have a previous resistance level here that could be acting as a support level now. As prices come down, they're testing their region. Prices are holding at 21 EMA. Now you tell yourself, okay, I want to enter long here. I'm anticipating prices are going to continue to push up. I want to capitalize on 1 point, 2 point moves. So now you enter the market. And as prices continue to push up, if you capitalize on these moves off one contract, you could be making a lot of money. Now, again, it's easier said than done. I don't want to try and glamorize it. It's not easy. Otherwise, everyone would be doing it. But the point I'm trying to make is recognizing where those resistance and support levels are critical as technical analysis traders. We like focusing on price action, supply, demand levels, resistance and support levels. All of that stuff is really important to us. But anyway, that's going to be it for today's video, talking about identifying trends, drawing trend lines and channels, talking about support and resistance levels. If you like the video, please leave a like, subscribe to the channel, turn on post notifications so you know exactly when I post this content. We're going to continue building on the foundation that we have right now. And in the next video, we're specifically going to be talking about how to count legs, as that will specifically help us in figuring out where to enter our trades. Leave a comment down below. Let me know how these videos are helping you. I read them all. I'll answer any questions you guys got. And until next time, thanks for watching.